Today is Monday, February 7th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Alan, looking at the rather volatile stock indexes, what's the outlook for the first quarter U.S. corporate earnings?
Well, of course, we're still finishing up with earnings from this last quarter, but as far as first quarter, it looks like estimates are now being decreased by analysts. In fact, we're seeing the first decline in earnings for S&P 500 companies for the first quarter since the second quarter of 2020. So it does appear that possibly the U.S. economy is slowing, and that is being reflected in analysts' estimate of the first quarter corporate earnings numbers.
And what about the dollar? Can you give us your outlook for the U.S. dollar?
Okay, the dollar seems to be underperforming the news. Of course, we did have the much better than expected non-farm payrolls report on Friday, and yet the dollar was really not that much stronger, and really it's not really doing much today. So I think the dollar index, in my estimation, is underperforming the news. So I would expect one more new low for the dollar index, possibly holding at the 95 even area, but just an underperformance suggests that the dollar index will work lower over the near term.
And as you know, there's talk about higher interest rates. I think with the consensus, the street has 3 to 4 interest hikes priced in this year. How hawkish are the world's major central banks?
Well, for the most part, they are mostly hawkish, with one exception. After the Fed, with the 4 or 5 rate hikes that are anticipated, with the first one coming most likely at the March 16th meeting, there's the Bank of England, which just raised rates last week, and there could be another 3 hikes from the Bank of England. We had the Bank of Canada a bit on the hawkish side, the European Central Bank becoming more hawkish as well. It now looks like there will be a 40 basis point increase before the end of the year, possibly in several meetings. But the Bank of Japan is still very adamant, keeping their policy steady. In fact, we had the Bank of Japan governor indicating on several occasions recently that they are not interested in withdrawing accommodation. So with that being said, I think the opportunities still lie in long the British pound, which is going to be rather hawkish this year, and shorting the yen with their easy money persisting, either outright long the pound, outright short the yen, or both on a spread.
Yeah, obviously the currency trades are very much related to interest rates.
Absolutely. That's the driving force, is the interest rate trends for all the currencies.
Steve, turning to the grain markets, what do you think the USDA will say about grain supply and demand, and will it be enough to push prices even higher?
I think the trade is looking for a decline in the South American corn crop, somewhere between 4 and 5 million tons, beans maybe 10 million tons. But privately, people are as high as 15 million tons lower in the corn, and maybe 20, 25 million tons in the beans. They probably will show a slight increase in corn demand and lower carryout. Some people are using actually 40 million bushels lower in the bean carryout, and they could lower exports in wheat and raise the carryout. So the market is positioned for kind of a friendly corn and bean report, and maybe a negative wheat report.
See, March soybeans are making new highs. Corn and wheat futures are following. What are the next price objectives for March beans, March corn, and KC March wheat?
I think the market feels that the funds will push nearby beans over $16, with the next objective of $16.80. For corn, we got to get over contract highs at $6.42 on the March, and then we go to $6.80. For Kansas City wheat, we're back close to $8, and I think most people feel that if the dryness continues in the southern plains into March, we could have $9 Kansas City wheat.
Steve, give our viewers an update on the weather in both South America and the U.S. Southern Plains and the potential impact it could have on futures prices.
La Nina is still the dominant feature in global weather conditions. So we did see some saving rains in Argentina, but now it's turned warm and dry again. Paraguay has lost more than half of their soybean crop, and it's going to be dry there. Southern Brazil will turn dry, and it's raining too much in central Brazil, slowing the harvest there. So I think that the weather conditions in South America still could have a friendly impact on prices. Here in the United States, you've got pretty much warm and dry conditions in the western half of the U.S. and wet conditions in the eastern half. And I think that the dryness in the southern plains, it has to be watched pretty closely, because if that continues into March, it raises the possibility that not only could the southern plains be warm this summer and dry, but so could the western corn belt.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.